In the weekend video, I'm going to take a look at gold and see if we can get some clues as to whether or not we might have one more leg down before this intermediate cycle decline is over. And I tend to think probably not. I was looking for a deeper decline. I would have liked to at least seen this 1800 level tested, and better still would have been a move back down to that 1750 level. But I'm not convinced at this point that we're going to get it. So first off, we have technically met all the requirements, the major requirements anyway, to confirm an intermediate cycle low. The decline went deep enough and lasted long enough to turn this is a daily chart, so this is the 50-day moving average. Technically, what I look at is the 10-week moving average, but it's basically the same thing as the 50-day moving average. So that requirement has been met. We broke the intermediate uptrend line. All right, so here's the intermediate uptrend line. You can see we've clearly broke that, and when we did, we got a kind of a big whoosh down to break below the 50-day moving average. So that requirement has been met. We also completed at least an ABC corrective move. That's usually, it doesn't happen 100% of the time, but I'd say probably 90% of the time. An intermediate cycle low in any asset will unfold at least as an ABC correction. Sometimes it can be longer with more waves, but this one did. Clearly, the A wave down, and we got a bounce, got some chop, and then we got a clear second wave down. So at least the ABC pattern. And then the final requirement parameter, I like to see at least a 38% retracement before I try and call any intermediate bottom. Now the stock market correction, I don't think did that, but not terribly worried about that. The stock market has clearly completed an intermediate cycle low. I also think it's probably in the it's still in a kind of a zone of volatility. I'm not sure we've kicked off the second phase of the bubble yet, but I do think the stock market is probably in a bubble, so that would explain why it had such a mild ICL. Gold is not in a bubble phase yet, so I would expect any ICL to at least retrace 38%. You can see it did that. So it has completed all the major confirmations that I need to see before I try and call a final intermediate cycle low. So at this point, let me erase this. At this point, I think there is a decent shot that this is going to turn out to be a final intermediate cycle low. Now, if I move over to the minors, we had 21 weeks moving up into this intermediate top. So the advancing phase of the intermediate cycle lasted 21 weeks. Then we had 8 weeks moving down into this bottom. That's 38% of the time we've spent in the declining phase of the intermediate cycle. And in a bull market, intermediate cycles should right translate. That's what this has done. 21 weeks is obviously clearly a right translated cycle. 38% of the cycle in the declining phase of the intermediate cycle is about normal. And at this point, we're already pretty late in this cycle. It's actually a stretched cycle. Even if you assume this is the bottom, this would still be a fairly stretched cycle at I think it's 28 weeks. Yeah, so this would be week 28. That's a pretty stretched cycle, and we've completed a weekly swing. And by that I mean price. This was the bottoming candle on week 28, and price has rallied enough to move back above the intra-week high here. So we've completed a weekly swing low, and we've done it with the potential bottom coming at 28 weeks. And like I said, that is Certainly long enough to complete an ICL. Certainly, spent enough time in the declining phase to complete an ICL. Last week, um, the miners made their first attempt to try and recover this 10-week moving average. This week, they tried again, um, came up a little bit short. We had options expiration on Friday, and I warned everybody that the banks were going to slam the metals and pin GDX at least below $40 to expire as many call option contracts out of the money as possible. So we knew that was going to happen. So there was little chance this week of holding this breakout, and little chance of closing the week above $40. So this week was kind of not really about much other than just how the banks needed to close price on Friday to expire those option contracts. But during the week, we made another attempt to get back above this 10-week moving average. And so the first sign that I look for, well, we already got it in gold, is a break of that intermediate trend line. And the next thing is we will get a recovery of the 10-week moving average, and we've already tried or started that process twice now. Tried last week, tried again this week. And then if I move to the daily charts, you can see we're making higher highs and higher lows. That usually only happens once an intermediate cycle bottom has been left behind. So here was our first peak, and we get that big scary down day, but then it recovers, get the gap up open. I think that was last Friday, and then we make another higher high. So we've got a higher high here above this peak, corrective move that tests the 10-day moving average, and then we get another higher high. And as you recall, this was on a day when gold, I think, was down, and the miners made another higher high. So we've changed the pattern of lower lows and lower highs to one of higher highs and higher lows here. And again, Friday was just kind of it was just all about closing price below that $40 level there to expire long call option contracts. So I don't put much weight on what happened Friday. So the question is, are we going to remain stuck in this, volatile? You can see this has been very volatile, even though it's rising. Price is moving up, and it's making higher highs and higher lows. It's very volatile and very hard to trade. These big sell-offs, they tend to knock people off, even though gold hasn't really done anything wrong. It hasn't reversed this pattern of higher highs and higher lows, but it's just volatile, and it's just not really going anywhere. And so every one of these down days, you get people get knocked off because they're fearful now. Whereas after this, people were afraid of missing the next rally, and that's why you get this big reactionary move. And then all through here, people were afraid of missing the next rally. They were buying early because they had been conditioned to expect higher prices by this huge rally here. And now that is kind of fading away, and that's what happens at intermediate cycle lows. Now people are starting to become afraid that we're going to make another leg down. At this point here, they were afraid they were going to miss the next leg up. Now we're in. Now sentiment has turned back around, and now people are afraid that they're going to get caught in another leg down. So sentiment has, for the most part, completely reversed. Not as much as I would like to see. We would have really generated some negative sentiment if we could have gotten down to 1800 or 1750. But at this point, we've already eaten up 8 weeks going down. We got another 2 or 3 weeks in this choppy mess here. So we've kind of, I think, probably lost our opportunity for that bloodbath phase. At this point, this is just starting to look like another one of those choppy sideways messes that we've had over the last several ICLs. All right, here's an expanded picture. So you can see here's an ICL, just a choppy mess moving down. Same thing here, just a choppy mess, but not really much damage. Kind of the same thing here, just a big choppy mess with one quick little whoosh down. And I'm kind of the opinion that I'm just not going to get what I was looking for. Really wanted to see at least 1800, that level tested, preferably 1750. Give us, a nice, really scary ICL. I'm at this point, I'm kind of given up on that scenario. This just looks like we're stuck in another one of these sideways grinds, and it may be over, but it just may not be ready to really take off to the upside just yet. The dollar is rallying out of a daily cycle, though. That daily cycle has to roll over, and I expect it will, either after the election, or it's going to do it once we get some kind of a stimulus deal. Um, Everybody knows at some point the stimulus is coming. It's going to mean a lot more money printing, and then the dollar is going to roll over and start the next leg down into the 3-year cycle low, and that should be the fundamental driver for the next trending move to begin in the metals. But right now, we're just, as long as the dollar continues to rally, at best, we're going to just be caught in a choppy period here. But I've kind of given up on the idea of a lower low. I may be wrong on that, but it just, at this point, it doesn't really look like it. And if we do get a lower low, I don't think it's going to go very far. You can see this lower low here didn't really, all it did was marginally break below this low. If we get another one, I think it's going to be the same thing. It'll just be a marginal break below this. So I don't think there's much damage ahead, even if we do have to make a lower low for the metal market. So at this point, we're just kind of waiting patiently for the next trending move to start, and it will start as soon as the daily cycle in the dollar tops.